Here are the crypto top headlines covered in this video. Billions to pour into XRP as Ripple boss Garlinghouse foresees crypto market doubling to $5 trillion in 2024. Next, Polkadot active addresses hit record 600,000. Also, dYdX community approves 20 million token stake as network activity soars. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We have a quick request that doesn't cost you anything in order to help. Help us grow this channel to 1,000 subscribers by September, which would be our channel's 1-year anniversary. All we ask is that you click on the like and subscribe buttons, as well as the notification bell. By clicking on these, it does help grow the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, billions to pour into XRP as Ripple boss Garlinghouse foresees crypto market doubling to $5 trillion in 2024. Ripple CEO Brad Garlinghouse, undeterred by the company's long drawn-out legal battle with the U.S. Securities and Exchange Commission, retains an optimistic outlook for the crypto market. Garlinghouse foresees the crypto market cap doubling by year-end to hit the $5 trillion mark. Bitcoin ETFs to propel crypto market higher. The crypto market has maintained a bullish momentum in 2024, with Bitcoin gaining over 68.19% year-to-date following the anticipation and greenlighting of the first U.S.-based spot Bitcoin ETFs, which have ushered in a fresh wave of investor interest in digital assets. Speaking with CNBC, Ripple's Brad Garlinghouse said he's very optimistic about the present state of the crypto industry. Garlinghouse cited the spot Bitcoin ETFs as one of the main catalysts pushing the prices higher. According to him, the crypto market is attracting real institutional money for the very first time. After a successful launch in January, BlackRock's IBIT now holds over $17.7 billion in assets under management. Demand for the 9 newly approved ETFs has been strong overall, with inflows into these funds directly impacting prices since the products buy and hold tokens themselves. Halving to drive gains. Garlinghouse further predicted that the halving could be another macro tailwind for the crypto market. Halving, which takes place quadrennially, slashes Bitcoin's supply growth by half, historically spurring upward pressure on the price of the alpha cryptocurrency. The next Bitcoin halving event is just 12 days away. The past halving cycles thrust BTC to record highs, and this time robust demand from the spot ETFs may add even more fuel to the rally. CoinGecko data shows the current global crypto market cap stands at approximately $2.7 trillion. The overall market cap of the crypto industry is easily predicted to double by the end of this year, as it's impacted by all these macro factors, Garlinghouse asserted. Garlinghouse optimistic on crypto regulation. The global crypto asset regulatory environment has been coming into sharper focus for crypto investors in recent months. European regulators passed new anti-money laundering legislation in March, while the U.S. Securities and Exchange Commission made moves to class Ether as a security ahead of a key May deadline on multiple spot ETH ETF applications. Meanwhile, the Ripple CEO revealed that he expects more regulatory clarity in the United States after the country's new administration takes office in this year's election. As Crypto reported previously, XRP is on the verge of seeing significant inflows in billions as Ripple is jumping into the $155 billion stablecoin market dominated by Tether's USDT and Circle's USDC. Its proposed US dollar-pegged stablecoin is expected to be launched on the XRP ledger and Ethereum. Let me pause here for a moment If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Polkadot active addresses hit record 600,000. Active addresses on Polkadot have hit a new all-time high of 600,000 despite the community's meme coin efforts failing to bring more attention to the protocol. The Polkadot blockchain has reached a new all-time high in active addresses on its network. Polkadot amassed over 600,000 active addresses on-chain by the end of March, according to data by .lake shared in an April 7th X post by Polkadot. Activity continues to grow in the Polkadot ecosystem, where many apps use dedicated block space to prevent issues like network spam. Over 41%, or 248,000, of the 605,000 addresses are attributed to the cross-chain smart contract platform Moonbeam, while 191,000 addresses were created directly on Polkadot, according to .lake data. The number of unique accounts with non-zero balances is also on the rise, surpassing 5.59 million accounts at the end of March, up from 5.53 million at the end of February. However, total transactions remain subdued on the network. Polkadot saw a total of 11.58 million monthly transactions in March, slightly up from 10.8 million in April, but far below the 31.78 million transactions recorded in December 2023. Polkadot's token fell 3.3% in the 24 hours leading up to 12:38 p.m. UTC to trade at $8.95 as the 14th largest cryptocurrency by market capitalization. DOT is currently down 83% from its all-time high of $55 reached in November 2021, according to CoinMarketCap data. Dead meme coin fails to deliver. In an effort to capitalize on the current meme coin frenzy and bring more participants to the blockchain, the Polkadot community spun up its own meme coin, DOT is Dead, or DED, which started trending on X on March 23rd. Investors holding Polkadot were eligible for 36 DED tokens for every one DOT held. Retail sentiment turned sour after the team reduced the initial airdrop allocation from 100% of the token supply to just 5% to create a longer financial runway for the meme coin, explained one of its pseudonymous developers, Giotto de Filippi, during a March 24th X Spaces. DED is currently worth a little over 0.001 cents, with seemingly little interest following the airdrop distribution. The DOT to DED trading pair only amassed $20,536 in 24-hour trading volume, according to the liquidity pool on Hydrax. Our next top headline, dYdX community approves 20 million token stake as network activity soars. The dYdX community approved staking 20 million dYdX tokens as a security measure as the protocol experiences a spike in trading activity. The dYdX community approved staking 20 million dYdX tokens to strengthen security as the decentralized crypto exchange, or DEX, experiences a surge in activity. The proposal passed on April 6th with 91.7% of votes in favor, allowing tokens from the community treasury worth over $61 million at current prices to be staked with liquid staking protocol Stride. According to dYdX, the move is a response to the growing trading activity on the protocol. The rate of dYdX being staked to validators has plateaued and deposits to the exchange are growing at a tremendous pace. Over $140 million of USDC is held in dYdX v4, of which roughly $100 million arrived in the past week. Staking is the process of locking cryptocurrency to support a blockchain network's operations, like processing transactions or validating new blocks. Participants or stakers commit their tokens as stakes in the network. In return for their service and the risks, such as potential token value fluctuation, stakers receive rewards, often in the form of additional tokens. By staking its native tokens, the DEX is seeking to shield its network from a possible control attack, similar to a 51% attack. This type of attack happens when a malicious entity gains control over a significant amount of a blockchain's hashing power, enabling the network to be manipulated. Decentralizing voting power prevents such attacks from occurring. dYdX noted that its network architecture enables a scenario where an attacker with just 1/3 of the voting power could pause on-chain operations. Additionally, possessing 2/3 of the voting power could allow such actors to potentially misuse the funds of users and the community within the dYdX chain. Since the voting power today is $456 million, a malicious actor must contribute at least $912 million in staked dYdX to take control of the protocol, which would allow them to exploit user deposits and community assets. This sounds like a lot today, but it isn't such a high barrier when we factor in that only 11.5% of the total supply of dYdX are staked. Staking rewards on dYdX accrue in the stablecoin USD coin or USDC and are generated from the fees users pay to trade on the protocol. Stride's mechanism allows dYdX stakes to increase automatically over time as rewards are recompounded. For the staking service, the dYdX community will pay a 7.5% fee on the staked positions. Data from DeFi Llama shows dYdX total value locked on-chain at $504.48 at the time of writing. The network generated over $48.59 million in fees over the past 12 months. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.